212 CTM. What's going on, everyone? Hope you're well on this Thursday after FOMC Powell Wednesday. What did we say? We said during yesterday's session that likely what's going to happen is that um, the earnings after the bell, Meta and Microsoft were likely going to be paramount and run the market. Sure enough, if you saw out there on X, we were observing that Nvidia, for some reason, was bright green, up 2% as Powell was, some people say that he was hawkish. We'll talk about that specifically today. We'll give some of my thoughts on what actually took place yesterday. And yesterday, as Powell was speaking, and then you see that like markets perceiving that to be quite hawkish. Obviously, September is mostly priced out at this point for a cut to take place. And he says, right? He hinted that like, listen, you should be happy I'm not raising rates right now. And in fact, what he did do in a sense was after Trump went down and visited him at his workplace, he doubled down. We said that, if I was Powell, that I would likely double down and think that's kind of what he did, but he's got some points here, but we'll talk about that in a minute. And then you saw, leading up into earnings, markets start bouncing a little bit, and then mega earnings by Meta and Microsoft. And you saw that obviously markets were able to go ahead and overnight really extend those gains on the open overnight. And then New York Open, they do what they do. And we saw a fade right back down to this particular area. And here we are. What did he say? Well, we got a good summary. Oh no. There we go. There we go. All right. So, boom, maybe Jordan give us a breakdown in tomorrow's meeting of what the Fed is signaling. Seems to me as if rates are staying put until a true down is caused by employment or rates dump into deflationary practically. GDP was actually positive today. Jobs report on Friday. Crossing fingers. Regard the CTM strong through this muck. And yeah, like you know what? We got a lot of data between now and the next Fed meeting. It's one of those times where we get two CPIs, two PCEs, two jobs reports, and you know what? We'll have a lot further clarity in so much as that we're coming through what is, likely just like heads up, not the best seasonalities. We're watching the hard data like hawks because we want to know whether or not we're headed towards some type of an event-driven recession. We're watching the pressure that's about to be put on the market as the Treasury. Look at that. You can see all the offerings just all of a sudden light up. We're not even into August yet, and August is when the estimates here are for significant amount of raises. And does that mean that the markets are headed for a correction? No, but we're watching, and our assumptions are that we could be headed towards a tough period with a little bit of adverse. This is not the time to from my opinion, to be like full on speculative risk taking. Let's wait until October, November to see what's transpiring around then. But it doesn't mean that as we head into the middle of August, that markets can't be higher. Want to watch the price action today and come down to the daily time frame. And, if you were to see, Powell coming off, like, was it hawkish, or is it hawkish if the economy is doing so well that you do not need to lower rates and you could actually keep rates elevated? I don't read that as hawkish. I read it as normal, but I suppose that what the president of the United States is trying to do, and what the Treasury of the United States is trying to do, is to really foster growth. And actually the theme of today's session is going to be like, are we indeed late cycle, or what potentially is transpiring? And like, That's the main question everyone should be asking themselves. It's what I'm asking myself. It's what I want to have the best, the clearest indication of what's taking place. A lot of people really think that we are coming close to the end of a liquidity cycle. We're about to go bananas, and then after that, we're headed into a bear market. And I know I'm an outlier. I know that what I'm seeing is no, it looks like that we're seems to be clear that we're entering into a period of fiscal dominance. It doesn't mean that they're going to be able to pull it off, but we continue to see signs that are saying that we're looking for an escalation. We're gonna look at it and try our best to wrap our minds around what's taking place and look at specific indicators to know when we're right and when we're wrong, right? So as far as an event-driven recession, we're looking now at the hard data. And the hard data is inflation data, it's jobs data, and it's also the consumer. So we're focused on making sure that the consumer, the U.S. consumer, stays intact. We're watching that the job market remains intact, and we're watching that inflation doesn't begin to rise. All of those things would signal that we are seeing hard data deteriorate. And at that particular point in time, we are headed towards an event-driven recession. Is it possible to say that the data is manipulated? Yeah, the data is manipulated. Nevertheless, we have to navigate without it. Nice call on that. I just saw some headlines going over Twitter about the opening price. Let's see the appetite for speculation. That's pretty cool to watch. D Power, that's a good one over there. Appreciate that. Yeah, and it's hard. I mean, Microsoft Meta is running out of cash. They're spending like crazy. Zuck is, trying to make sure that he doesn't get left behind. But without leaning into any type of credit lines, cash on hand, they are running through that, right? So that's something to factor in. Like right now, Meta is spending roughly, like rough numbers, instead of 65 billion on hardware, now 75 billion. What happens next year, right? Where are they going to get the money? We have to watch to see whether or not their spending slows down. But markets more forward looking. How forward looking are they going to be today on MicroStrategy strategies earnings? A lot of people think that Wall Street has got it wrong and that they should be that Saylor's about to, I guess, wake everyone on Wall Street up. I don't know. Markets are, why not efficient, are pretty, people are pretty apt. We'll find out though. I'm excited for the earnings after the bell. We also have after the bell today, by the way. It's not just MicroStrategy. We got Amazon. I think that's a barometer of the consumer. Let's see what type of effects tariffs may or may not be having. Apple, that could continue. Did you see that finally FANG on our late entry? It's a late entry, is now beginning to move into profit. And you see over here you have FANG finally, over 5% into profit. I like to see that. We were thinking that, yesterday's earnings, MicroStrategy, sorry, Meta and Microsoft could make or break that. Nvidia continues to hold and build over here, almost 27% into profit, and TQQQ holding 36% into profit. And then, of course, we have the spot ETFs here, 8% into profit. Tesla stopped out yesterday, and then you could see that MicroStrategy also on the sidelines a little bit today ahead of its earnings. And that is just a beautiful place for us to be. And let me just go ahead and bring in what's going on with MicroStrategy. And it's not even close to an entry. It's going to have to deliver on the earnings and then see some upside momentum for us. That's FNGU, for us to see some potential here for a re-entry. And it still looks good. It looks good to me. Let's see what happens here. I'm excited for after the bell today to see what happens with strategy. And Tesla continues here. Did you see the robots are coming? Tesla continues here to be under pressure. Elon said and signaled that it could be a few quarters of further pressure. We'll find out if his pivot to the middle is going to help him be able to get some sales going. We'll find out. Lots of ums today. Bitcoin looking good. Let me go ahead over to this chart over here. It's just, let me find it. Don't even have it. Whatever. We'll go back. Nice and easy. All right. I guess this is the best I could do. I don't like it with but yeah, Bitcoin continues here to be setting up in what looks like a nice, healthy consolidation. I see people now. Well, how long we've been in consolidation now? Since the first week of July, now into the last day of the month, and then people are like, "Oh yeah, Bitcoin now is entering into consolidation." Captain Obvious is, love the foresight that people have. And yeah, continues to look healthy. We have our spots here where we see obviously breakout. We want to see this be able to continue making a leg up. A lot of people are so used to these multi-month consolidations. It's becoming ingrained. And then we break down over here. We're expecting a retest into this area over here. All super healthy, even a retest back into the breakout. And Bitcoin has some healthy room over here. Obviously, Bitcoin bull runs continues to hold into extension. This is a great question. I'm going to start with this, and then I'll get into MicroStrategy looks very bullish. I agree with your read on that. And, I'm not even going to zoom out too far. I'm just going to come in over the last, year and a half or so. And it looks very bullish. And is it safe to say that as Bitcoin goes, so does MicroStrategy, right? Have we topped here? Has Bitcoin put in a cycle top here? Is it about to go bananas? Or is the cycle going to continue a lot longer than most people expect, right? And MicroStrategy obviously has all those factors in play. Looks good. I hope we get a re-entry, and I hope it extends up. I hope today's earnings actually work very favorable. I guess the one thing for me is, when MicroStrategy's earnings on unrealized gains, there will come a point in time where it's in unrealized losses too. And I could picture a situation where, it's very normal to see MicroStrategy off 40%, from its all-time high. And here's a recent drawdown 56%. Those are not uncommon. Those are so common. Here's a bear market, right? And 93%. And then over here we have another one during a bull market, and you could see that MicroStrategy off 50%. So a 40-50% drawdown on MicroStrategy in a bull market is quite common, and as is a 30% pullback in Bitcoin, right? In a bull market. Both those things are quite common. And if you were to see that happening, and MicroStrategy is unrealized gains are going to be down significantly, I think that's not going to go over well for earnings. So I'm not so sure that what we're seeing is a mispricing. We're going to find out the market's reaction to that today. So that's why I'm looking forward to it, because it's not so much about what I think, it's more about what is. And that's going to be a really important observation for us to make later today. All right. Something that I wanted to take a look at with y'all as we're looking at Bitcoin bull runs, and this question came up off of yesterday's stream. Let's start there, and then we will get into the heart of today's session. Where are we in cycle? And we're going to look at that objectively and try to get our bearings of not only where we are right now, but what we are going to look at forward to make sure that we stay on the right side. CTM, we have a long history of staying on the right side, and we want to make sure that we're able to do it. I'm focused in on this question over here. I think it's a good one to start off of. William, my opinion of MicroStrategy is that it is something that very much belongs in our portfolio. Our portfolio consists of, I'm talking stocks right now, okay? So as far as stocks, we trade TQQQ, 3 times leveraged of the QQQ tech NASDAQ play. And what we like about that is it's a revolving door, meaning best performers are involved in the allocation. We expect over the next 20 years that it's going to outperform, and that's why we choose it. We've placed it inside our portfolio. Nvidia's been obviously a darling, and I continue to see the need for its chips, its hardware, and its software, and I think that Nvidia is going to continue to be a major player. Is it the next Cisco? I don't know. I mean, the mind of the AI takes place on its chips. Was the internet about all its routers? There was a lot of unknowns back then. We've recently included the Bitcoin spot ETFs as an equity play into our portfolio. We have a tech-based portfolio. We have FNGU, which is FANG triple leveraged. Again, much like the TQQQ, it's our best performer there is, and it outperforms crypto returns. So we're very, and then Tesla also. We've focused on what we believe to be the most desirable tech plays, and then we've included in that the spot ETFs. Because obviously I'm a believer in Bitcoin, right? And I believe that Bitcoin over the next 10 years is going to continue to well outperform. We want to have some type of allocation towards that. And then also, yes, MicroStrategy as well. And instead of guessing what's going to happen with MicroStrategy, what we do is we know when to be in the market, when out, and on what side. And that's the only way to go about it. There's no guessing. What do I think is going to happen with MicroStrategy? Do I think that its earnings are going to surprise the street and MicroStrategy is going to, break 500 tomorrow? I don't know. What's the implied volatility in the options market saying? What type of move is the market expecting? I'm more interested to see, is the street actually surprised, and does it create a buzz, or is it actually being viewed correctly as, yeah, that works on the upside, but when Bitcoin's in drawdown and then, and MicroStrategy's in drawdown, that's going to work really bad on the downside. I'm not sure how they take it in. It doesn't really matter. We are just waiting to pick our spots to see when momentum is kicking, and then that is how we navigate the markets. Jumping back over, and I want to talk a little bit about this question that was posed yesterday, and general question to the followers of this channel. Do you think the 4-year cycle is still on for alts? Here's my thinking. If you suspect that this time is different for Bitcoin, but not for alts, one could try to short alts during what is historically a bear market season, right? Obviously, in a normal bear market, normal being Bitcoin is off 85%, 75%, alts are off ridiculously more, 95%. Even if Bitcoin would defy this cycle, and as long as alts don't, you can make some money. If you are wrong on Bitcoin and it doesn't defy the cycle, then you were not trying to be bullish in a bear market. After the situation is clearer, you could safely rotate back into long Bitcoin. Any views on this? So it's good thinking, right? And that's important. Creative thinking always leads somewhere. And saying, look, I like what this is saying in a nutshell. I hope I don't get it wrong, but if Bitcoin's cycle is different and it's because of adoption, are we about to see this continue? And assuming this continues, not just into the beginning of 2026 as 4-year cycle, expectations will be pushed back further if they've not met. If we're not going bananas, people, oh, early 2026, right? And then they can only push it back so long until like that's not the 4-year cycle. But right now they're 2026, and then as you move in towards the summer of 2026 should be glaringly different. If that's happening, should right now people position short altcoins, because right now alts don't perform well in a bear market. They perform horrific. It's like a hedge in a sense. Do I stay long Bitcoin and then hedge short alts? This is actually a great question for today's session, because we're going to be talking about where we are in cycle, and we're going to try to get the best read we could get. And we've done a lot of that recently. We've talked about, indications that the 4-year cycle's dead. And then we talk clearly about why the top is getting close in if you believe in the 4-year cycle, right? So, all right, let's get in over here. And I'm going to start with this. Okay. Let's take a look at what's going on. Starting with, first of all, where we are in cycle. This is really important. I'm gonna throw in some nuggets here, and then we'll come back to this in just a little bit as we continue the discussion and take it to a different level. But normal 4-year cycle behavior, and looking at Bitcoin dominance here. So this one's tough, like in so much as this for me, right? Like what's the length of this period? So here you could say Bitcoin dominance bottoms here in January 2018 when Bitcoin bottomed, right? And then you could say that there was either 600 days or 1,000 days, 1,100 days, until when Bitcoin dominance peaked, and then alts had a run. Trying to get the length here of the cycle. I suppose what's different is this time is here there was one bottom, right? It was that capitulation of Bitcoin when it was going sideways for months upon months in that descending triangle, and then in an instant came off 50%, and then boom, that was it. This time you saw over here, was the bottom in May? Was the bottom when Bitcoin bottomed in December of 2022? And during this period, even though Bitcoin dominance doesn't get like levels out, alts continued their decline significantly. Now you had some things happen or take place, like Ethereum bottomed in June of 2022 ahead of Bitcoin's bottom. You had things like Solana, like shooting, like massive appreciation on Solana. So it wasn't very clear, but over the overall altcoin market, they continued to make significant lows until Bitcoin actually bottomed. So I think it's best to go off of when it bottomed, right? In this area over here, and then how many days we have till now. It's roughly the same. That was 1,100, which 1,100 days will be, taking us into the heart of the 4-year cycle, and when the 4-year cycle is expected to top. And in that moment, will we see much more of the same? Bitcoin top, and then alts have alt season, that period of 2-3 weeks where they all appreciate versus Bitcoin. That's one thing to look out for. So if you're trying to set up, playing alts in a bear market, you probably want to look for first for them to actually have a blow off top. Right? I would not expect alts are going to be entering into a bear market without first them going bananas. So that would be a first sign if you're looking to get into shorting alts, what you'd be looking for. I will remind you that right now we're watching, actually, as far as alts, right? We continue to see, I'm just going to zoom out so you get a better read on this. Like, this to me looks like a massive cup and handle. It looks a lot like gold, right? When we called the bull market super cycle breakout of gold. Let me just jump over and show you what that looks like zoomed out. It looks a lot like this, including the double handle. Here's one handle, here's two handle, and then even the three, right? So you have a cup and handle, and I didn't never notice this before, but you have a cup and handle, and I'm seeing that you didn't hit the like button, and I don't understand. Yeah, go ahead, smash the like button, show and spread some love over here. But I am seeing not only a cup and handle, but I am seeing also an inverted head and shoulders here, and that led to a massive move on gold. And by the way, just while we're here for a second, let me just jump back into real time, and you could see that we have our breakdown retest, pressure still on gold. I'm wondering, you know, when we're wrong, when that's invalidated, when we see strength returning. For now, it has to be getting back above this trend line. All right, moving back over to alts, and in relation to what we were just looking at on gold. And yeah, I see what looks like so it looks like silver, actually. Silver has this. Sorry, we got to go back to silver now. We gotta, we gotta make sure that we all get this, and zooming out on silver. And silver to me looks like this. Silver looks like a cup and handle that's slightly tilted, and that strong breakout. Just going back to alts, and that's what I see on alts is, let me get that straight. Like, I see that, you could see it now, right? That cup and handle, and then so far a perfect retest, and trying now to make, now we'll come with a horizontal cup. And if it breaks out from here, and I expect it's going to eventually, for sure. I mean, I really believe that. I don't believe that this cycle ends without altcoins being able to break out of that pattern. And I think when altcoins break out of that pattern, it's going to be something of epic proportions. Now, right now, we're looking at dollar going bid. Is this the time that likely we're going to see alts go bananas? It's not what history suggests. I mean, when I talk about history, I'm trying to look for a place where maybe we have it here. I don't have it here. I was looking for the chart we use of the DXY and gold, and how when it, when the dollar sells off, that's when boom, the launch occurs. But I think that there's a good chance that eventually here that the breakout of this pattern should be of epic proportions. And it doesn't mean that we're breaking out now. Is there a possibility that we don't break out and the cycle ends without any banana zone? I don't think so. I'm just coming back over here. There's something I want to add to this conversation, something I want to look at with you. And oh yeah, I mean, look, like right now, I think it's very important to. Right now, we're on the sidelines on Bitcoin, and our alts and Ethereum it's an alternative to Bitcoin. It's its own thing, also in a sense, and you don't have to call it an alt. And I was just even right before going live noticing that Ben Cowan was making the point that right now, likely you're going to see and continue to see a lot of alts bleed into Ethereum. And I think Ben is very good at picking up narrative for a reason and then sticking to it to its completion. And a lot of people look for things to happen a lot quicker than they do. I would pay attention and focus on the current narrative. It's a couple of weeks now. He's been talking about it ever since ETH went home, and I think it's right on time. Which is why I highlight it. Now, we didn't know that. We follow momentum, and you can see over here on Ethereum, like we're riding the downtrend, and then out of nowhere, long 50% gain, flip flop, long we're holding 47%. And what I'm getting at here, though, is this: we're also happen to be long on Cardano. We just exit a small trade on Solana, but alts are kind of in favor. And the first indication that I would have that we are looking at some type of bear market in alts will be when momentum is rolling over, and when alts are not on the buy side, when you see Ethereum, Cardano, Solana all trading on the short side. That for me is when I know momentum has rolled over. And yes, then likely we're in a bear market. But to be thinking and playing ahead and saying to yourself, like, you know what, we're like 4-year cycle around this time normally ends. I see something different transpiring in Bitcoin, and maybe I want to stay long Bitcoin. I'll hedge myself with alts. You could get wrecked, because I don't think personally that if there's something different with Bitcoin, that alts are going to go do much of the same. I don't think that for a second. I think that alt season is not even close. That's what I think. And why do I think that? Well, let's just go ahead and hit on this one more time. On this chart we're looking at, I think this is very important, because we're going to be talking about for where we are in cycle right now, and we'll be talking about PMIs as part of that. And right now, you're seeing PMIs basically stabilizing and right around the expansion, above 50s expansion. And then when I look at what happened in previous alt seasons, this is very important. And again, alt season and banana zone is not when you're seeing PMI above 50. It's when it's accelerated. At least above 55, 56 is when alts really start taking off. Check this out into this previous alt zone, this previous alt zone, this previous alt. I'm trying to line these up. I'm going the wrong way. Come on, dude. There we go. So here is when alt season starts taking off. You can see over here this massive move up on the PMI, taking it above 55, right? And once they got above 55, 56, 55, 56, once they got above 56, and this is when the economy is really moving and humming, you could see that that's when that alt speculation takes place. Same thing over here. You could wait and say that once we saw the PMI get above, right, 56 is when I know that Bitcoin had its final burst in that area. And, you know, you're talking a few weeks here, not a very long period of time, but this is when alt season, you know, occurred. Once that economy's running hot, time for speculation, speculation takes hold. We're not we're not close to that right now. So it's hard to suggest right now that you should be setting up and or looking for alt season. I don't see it coming anytime soon. That's what I see. I'm going to show you the other side of that view right now. Well, let's get into it. So I guess what I also want to say is that, as I noted yesterday when we were looking at the business cycle from Decode, let me jump over. I have it pulled up over here still, I believe. And I was saying that, yes, why my expectations too are that they're going to be able to pull it off. They're going to be able to accelerate into growth. And that if that's happening, then yes, you're going to see finally the business cycle taking off, which it's still contracted. However, it doesn't mean they'll be successful. You kind of, and you'll see very clearly in a second, you kind of have the Fed, obviously very restrictive right now with no plans of changing. They're pushing on the brakes. Government's trying to grow. It's why the president is so upset that they are, oh, guys, hold on, pre-sale. XAIX 101 token is in the pre-sale. Yeah. Oh, guys, unbelievable. So, but they might not pull it off. The Fed might be successful. The Fed, who's trying to put a brake on the economy, they might be successful in, and that's what they do. They begin raising rates, when starting QT, tapering, easing. Once everything is running hot, to stop it, and it goes. Which is why a lot of people think once the Fed starts cutting rates that the party's over and we're in for some trouble. And that's sometimes true. That's true when they're cutting into a recession. Why do I keep bringing up, and why do we keep looking at what's taking place there with, you know, if the hard data does indeed, decline, and then the possibility is that we're headed in for an event-driven recession. We want to be aware of it. No, I know that was spam. I thought everyone knew that was spam, which is why I was highlighting it and being trying to be funny about it. But yeah, that's all. Anytime you see on any of these YouTube comments, and I spend a significant amount of my time having to delete them all, but just in case someone doesn't know, I don't want people to get tricked. But I was just looking on this channel that I want to share with you right now as we talk about these different opinions, and you could see they're all over the place. Like these things are all scams. When you see people talking about XA is always in there coin, and they're all different one. They change every day. Those are all scams. I don't. Those are all scams. Be very, very, very careful about what's happening. Well, let's just go over to here, and this is. It was funny. It came to my attention because yesterday we were looking at some of the liquidity cycles, and liquidity cycles by Michael Howell of Cross Border Capital, and just a couple of observations that I also want to bring up for you right now as we look at that. I can't use the pointer, but you all know what happened in the year 2000. That was the mega .com bubble. And we all know that the majority of those gains happened not the previous 3 years when S&P made back to back to back 20% plus gains on the year, but it was in that final thrust of the bull. And if you look at this and you were to take 1999, focus your eyes on 1999 and that little line that comes into it, and you go straight up, that's where the liquidity cycle peaked. But we all know that that bull market went on for another 15 months. And liquidity cycle here was suggesting it would have peaked, but it's also a lot different if you go to what happened in 2008 during the great financial crisis. We're supposed to be in the thrust of a liquidity cycle in towards you're supposed to see price making new all-time highs, risk running hot, and you saw the exact opposite. So those are two important examples of when these liquidity cycles didn't really give you much clarity whatsoever. And like we all talk about the .com bubble bust, which began March in 2000, and that's great. But before the bust was an epic, epic bull market bubble. The bubble doesn't get to burst until you get to the bubble. And if you were following these liquidity cycles and you got offsides in 1999 because you thought that the 4-year cycle was coming to a bear, you were epically off on wrong sides if you're not participating, and worse if you were shorting it, then you're just insolvent and wrecked. Same thing over here in 2008. If during the 2008 you're positioning off the 2007 bottom and you're trying to get positioned into risk because liquidity cycle suggests that we're about to go into a highly favorable phase, you got wrecked. So how much of an aid is the liquidity cycle? That's just something to think about. And now we'll go ahead and we get some views here from Michael, who's the architect of that particular liquidity cycle, and Raul about right now, how about we're setting up into the final surge. So let's listen, because they could be right.
Howell and Powell, from very different frameworks, are now converging on the same conclusion. We're heading into the most aggressive part of the cycle. For Howell, the data comes from cross-border liquidity flows and debt refinancing needs. For Powell, it's about...
So, okay, I just looked at, there you go, Robert. I just looked at, he's saying this is happening because of liquidity cycles and debt refinancing. And if you remember in yesterday's session, I was just making the case for, wait a second, we are seeing a different nature of these debt refinancing cycles taking place with the Treasury now beginning to roll over short-term duration ever since Janet Yellen began that in 2021. Is that throwing off their not potentially? I think it is, but we'll find out.
network adoption curves, reflexive psychology, and ETF-driven retail participation. The bottom line? Whether you believe in macro
Wait, I missed because I was looking at some noise. I missed what they said for Raul.
bottom line, whether you believe in needs, for PAL, it's about network adoption curves, reflexive psychology, and ETF-driven retail participation. The bottom line?
That's not Powell speaking. I mean, that's not Powell speaking. So I'm gonna have to give that a pass because if we're looking at ETF inflows, those inflows are continuing to move well in the right direction. There's no signs of those coming off. If we look at adoption effects, I look at adoption effects. We are right now in what we call the early majority phase. And early majority phases is apparent to everyone. Why? Because right here, you see the spot ETFs launched. You see the institutions are here. You see corporate bid. You see governments here changing their posture. And yeah, this has nothing to do. If you're talking about network effects, this is exactly why I talk about we've just entered into the ultimate market opportunity. And I want to show you, again, forget how it's lined up. I could line these up so that like they're the same. And if I do this, people are like, "Oh, you think Bitcoin is going to $4 million by 2030?" No, what I'm trying to show you is that as you enter this particular phase of adoption, and I could go ahead, I can't delete that. I could do this really quick to make it a little bit hide, right? What happens though is after the hype phase, you enter the facing reality phase. And then if you're able to enter into the ultimate market opportunity, you don't see diminishing upside volatility. You see exponential growth. You see diminishing downside volatility, which you saw Bitcoin just experience during its previous bear market. And you could see it's experiencing during this bull market, as so far we've only seen drawdowns of a magnitude of 30%, 32%, which is the least amount of any bull market prior. You could see that diminishing downside volatility, but this suggests that, and this is just one, we've looked at multiple, you could see that what happens actually, instead of the diminishing returns, you could see this walk towards the top portion of the deviations. So if that's happening with Bitcoin, then likely we're going to see, and again, this is just a bad chart to show you because there's no deviations, but this is the upper deviations. Here we go. I got a better one for you. This would suggest to me, as we're coming into 2028, that we have been able to walk towards the top portion of these deviations. That's what I've been now for quite a while been, theorizing is actually taking place. And now that we're this far into cycle, a lot of people are noticing the difference. And I think that it's going to continue to become a lot more apparent. Now, if we enter into sorry, it's such a great question about the CBDCs. If we enter into a recession, Bitcoin is not going to respond well in a recession. If you go to the YouTube channel, it's the video that's highlighted, just so people understand the magnitude of what Bitcoin would be up against in a recession, or worse, a deflationary slow motion burst. So as far as CBDCs, I want to talk about it because I used to talk a lot about it. When we first started together, I used to talk a lot about CBDCs, including how I thought what we were going to see was going to be a engineered event to go ahead and institute them. CBDCs started with an IMF white paper 2018, and they talked about how they were going to have these central bank digital currencies backed by their special drawing right, which is a basket of currencies, including gold. What we're looking at today is that obviously being or trying to be instituted right now in Europe. However, in the US, it's changed. It's changed a lot. And what you're seeing is obviously the Genius Act just passed and stablecoins. And a lot of people say, well, those are just CBDCs. And I'm saying they're not. And I'm saying they're not because of a few different reasons. With CBDCs, first of all, that gives power from each individual country and centralizes it through the IMF, right? Which is like, I don't even know, let's call it a Davos institution. That's what it is. At World Bank, IMF, and so this gives power to them. What the US is in the midst of doing here is not only making sure that and we saw yesterday the Bank of International Settlements, they're against the stable coins. Why are they against the stable coins? Because it takes power away from them and it's giving it towards the US. And the US, right? What does it do for them? Obviously, now stable coins are backstopping the US Treasury market. And as they grow in size, there's going to be a lot more demand, further entrenching dollar dominance. This is not what these institutions designed and or wanted. Now, with CBDCs, you also have the ability to do what? Engineer those currencies to disappear if not spent after a certain amount of time, to be able to give different interest rates to different demographics, different races. You can't do that with a stablecoin. Now you can freeze a stablecoin. You can, for example, this is really scary. You had the trucker protest in Canada, and people that were just there, their bank accounts were frozen, except with stable coins, even, right? Not just with CBDC, even with the stable coin, you can, track that cell phone data, find out who was there, and just instantly freeze all of their access. That can be done. Yes, easier with a CBDC than with a stable coin, but they have no problem of freezing, and they've done it before. Tether has done it. You could, yeah, obviously freeze that money. And is that more control over the people's money than they have now? Unless cash was outlawed, no. In the EU, they're trying to outlaw transactions, I believe, more than $1,000 in cash. I'm not really positive on that number, but I think it's $1,000. And in the US, it doesn't seem that stable coins are going to affect the use of cash. Things could change quickly. I've seen many reports, whether it's Canada, whether it's the UK, whether it is Australia, and all three of those of the crown, but where people have a lot of trouble withdrawing cash from their bank. You need to have a reason, and then not only a reason, you need to. But I don't understand that. Like, you could just go to the ATM and you could go for a period of days and withdraw cash up to the limit. If that limit is $750, you could just however much cash you need, you just go and you withdraw it. You don't have to deal with the bank teller. Now, I get it, or maybe you don't get it, but when you put money at a bank, that's an IOU. That's not your money. It's no longer your money. They're holding it, and you have an IOU. So same thing with a money market fund. You place your money in a money market fund. That's in a fund. That's not a bank account that you're earning interest in. That's in a fund. Stablecoins is actually better. With a stablecoin, there's no settlement. You already own the money. You don't need to take it out of the money market fund, wait for the funds to settle, and then be able to buy whatever you need to buy. It's already settled. €3,000. Thank you. So, I mean, you have to go to the bank for that, more or less. What could you take out as far as a limit from an ATM in Europe? Because it seems to me a lot easier than dealing with a teller. So, are they looking to control people's money through stable coins? And Whitney Webb is another opposing voice. She believes that what stable coins are is just a backdoor CBDC. I think there's nuance and there's different. So I do. And I think that the plan was initially to launch CBDCs, and that's what they wanted. But I think that what you're seeing now is it's very clear in many different areas, but you're seeing you're seeing America breaking with what was the Davos agenda and those institutions, right? The World Health Organization. It's no longer be funded by the US. Now that could change quickly. You saw how quickly things changed recently in the UK. And depending on what happens in the next election, the election after that, things could change rapidly. That's just why that you can't just come into an idea and hold that idea. You need to be able to, you know, follow what's happening and stay on the right side. But as far as stable coins and CBDCs, I see a significant difference. And CBDCs were in no way meant to go ahead and stabilize the US Treasury market. Actually, you could see that under President Obama, they gave the IMF, loose numbers here, I think I'm correct, but I could be wrong, $350 billion to put towards their special drawing rights, which they then could lend out against, and it becomes just a whole new Ponzi. And that's the main difference. They're CBDCs in no way, shape, or form were supporting the dollar. They were actually de-dollarizing by doing it. That's my view. I hope you use it as a vantage point, not as the ultimate truth. That's just what I see taking place. Again, someone who thought going back 6 years ago that they were getting ready and they were trying to install CBDCs. That's changed. So there's different there's a lot different nuance to it. I think it's an incredible and worthy discussion, which is why I picked up on it. Again, follow Whitney Webb, listen to what she has to say, because it's drastically different than what I'm saying. And you want all sides to the conversation to help you figure out and make up your own mind. There's a chart I really wanted. I can't find it. There we go. Because I just saw over here, Bitcoin looks like it's ready to say hello to 107, and some simple TA over here. And yeah, so ideally, and that's not a bad looking chart we're looking at. That's a great looking chart that we're looking at right now. We know where it breaks down. We've looked at it. It's less noisy than the other ones, but on this one here, I have to bring this down. My eyes first focused over here. I am noticing that that's where the bodies wound up happening. That's where the resistance was. And I think that's still above the 107. I think I have to just confirm. I have to know. It's a pursuit of the truth. I don't care what I think. I want to know what is. So 107, even, yeah, if we, this is like the most generous breakdown that I could give. And then I also pointed out yesterday to you, this particular line over here. This is like, I don't want to be this late, and I'll see how far off. That's the 107 you're looking at. So that's a good look. If we break below that, that is bad. That is really bad. But even into 107, that's a 15% drawdown, which is why I'm trying to say over here. I mean, listen, it's a lot better than 15, but when you're coming off here and getting below 110, you know, if we break below 110, then yes, that's the earliest you could, in my opinion, de-risk down. I don't see a reason to de-risk down on a breakout and what is a retest yet. Things could escalate quickly. We've been looking at where we are right now in the seasonalities and coming in through the last part of the summer here and into the first 3 weeks of September. Are they helping us with maximum employment and stable economy? Listen, I don't, the way that I view things is different, and I don't like the way that they defined the unemployment numbers. It's been a long time since I've looked at the Shadow Stats site. If someone could pull up Shadow Stats employment numbers, that would probably be a good place to begin looking. But after people can't find employment for X amount of time and or no longer looking, they're taking out of those numbers. They're not considered to be like anymore seeking employment. I don't I don't I don't think that the numbers are correct. And at the same time, when Powell says right now the economy's strong, I agree with him. I have friends that are out of work. I have friends that have had really important and good tech jobs, and they've been out of work now for over a year, and it's not easy to interview well, very capable people. But I'm not seeing it. Um, and if it could be pointed out different, please, I want to learn. Let me know. So I don't think the economy is the stock market either. Robert, I love the back and forth, but we just looked at what happened in Germany, and the DAX was trading at an all-time high as they were in recession. Venezuela, right? Remember what happened in Venezuela? And as their economy went from one of the most robust in the entire world in a matter of short order, went to absolutely whatever adjective you could describe, to the worst of the worst. And their stock market continued during the devaluation to rise. That's the thing. If they're devaluing the currency, you're going to see the equity market rise. That's a tough one. I don't have the shadow stats. If someone could pull it up, I would like to look at it, but I want to continue this conversation. So I'm going to queue up the next. Raul and Michael believe that we are getting towards the end of this cycle. Raul puts it out towards the latest this could happen is early 2026, and both of them believe that at this point of cycle we're about to see bananas take place. Both of them believe that, and I'm not seeing bananas setting up and or anywhere close. So that's something that I'm watching out for. All right. If we go bananas, then we're gonna have to watch closely. I guess one way that we could look at, we don't even need to. The one difference that I'm throwing out there, I think nuance is so important, is that I do believe if we have an adoption event take place, if we see the Bitcoin Act passed, for example, you're going to see an elevated upcent on Bitcoin. Without that taking place, I think that this is our path. So over here, this is, again, we're getting close to the banana zone when people are expecting the banana zone. So we're going to have a clear indication about whether that actually takes place or not. We've looked at, or I tried to look at, the differences between what I thought was very fair and balanced, the different cycles, and how in 1999 is when that previous cycle peaked, and markets for the next 15 months not only roared, they did the extension of a top of a bubble. Also, you saw liquidity rising and going up all through from 2017 bottom into 2008 top. That's not what happened with the equity market. So I think it's just a poor indicator, much like M2. Now, let's look at this. I have over here some questions about two things we're going to go over. What are late cycle indicators? What's a return to growth? Because this is where I believe we are right now. And then we're going to look over here at this checklist. And this checklist is great because right now we talk about monetary policy lately and fiscal policy. And monetary policy is obviously tight. Powell, he has QT running. The yield curve is still inverted, which this is the longest on record, right? It's been like a lot of people 2 years ago, like yield curve is inverted. We're headed towards recession. Here we are today, right? And there's no doubt that rates are restrictive. Fed funds rates here, sharpest rate hiking cycle, and Powell keeping them elevated. So I think this chart here, from my view, clearly illustrates the frustration of the US government with the Federal Reserve. And that's that the Federal Reserve is being restrictive here in every which way. Check, check, check. And they're trying to do what they feel they need to do and grow their way out of this. So you could see the opposing views that are taking place over here. So let's first look at what some late cycle indicators are. And late cycle is restrictive monetary policy in place. And again, why this is a late cycle indicator is because the Fed, when monetary policy is paramount, is, again, they're able to add QE, they're able to lower rates, they're able to spur on growth, and then when things get hot, they're able to then begin raising rates, start QT, and it puts a brake on the economy. And then that's kind of like the Fed cycle. This time, though, they have been restrictive ever since March of 2022, and we're significantly higher. Their brakes are not working yet. It could catch up. It could catch up at any particular point in time. There's no doubt about it. And, you know, that's what we're watching for. That's why we're watching the hard data. Okay. I could imagine a situation where something breaks in the housing market, whether that be, is first layoffs and then all of a sudden people unable to meet obligations and or mortgage and something gives. And I could envision a situation where all that occurs. I watch out for it. So widening of the credit spreads, this would be something that's late cycle. Labor market softening. Okay, this is hard data that we watch for. We're not seeing that yet. Tomorrow's non-farm payroll. Earning growth's peaking. Okay, so that's an important one, and it's important because actually we're seeing earnings improving. That's not late cycle. That's indicative of growth. So here we have monetary policy is restrictive. That normally leads to a cycle top. But in this case, we're seeing earnings improving. That's indicative of growth. So that's something to be watch out for. I should just give someone a hammer to ban all those people, but whatever, it's fun. It gives me a second to break. So I'm looking at the green right now, or I should be looking at the credit markets because that's something that would be indicative of late cycle, a widening of credit spreads, and we're not seeing that right now. They're just neutral. Labor market remains neutral, right? If we see that accelerate and turn green, that would be a clear sign that we are returning to growth. Except for I don't think that's going to happen. I think that actually, AI, why might spur productivity? I think it's going to take away jobs. This is the new norm we live in. What's the new norm, Jordan? Guys, there's robots that are working factories right now. And over the next 5 years, that is going to accelerate. That is going to accelerate at an exponential rate. It is different what's taking place. We have to, not say this time is different unless we're Lynn Alden and she'll point to, forget monetary dominance. We're looking at fiscal dominance. Some people see it. Most don't see it yet. Market internals, tech is leading, outperforming. That shows expansion. Fiscal policy mix, stimulative. This should be fiscal dominance. Not, this should be called fiscal dominance. Right, we have these large deficits, direct support. They have to maintain them. This is why fiscal dominance is so important right now. Sentiment rotation, I don't really see it. Liquidity, mixed fiscal easing. This is the tension we're at, right? And the tension is a lot of people are calling this late cycle based on assumptions of 4-year cycle. And I'm saying, well, late cycle, you normally see PMIs rising. You don't see them having fallen off tremendously and then stabilizing. So what about what's continuing? As far as looking for a return to growth, real yields topping out, stabilizing PMIs. We are definitely seeing that. We looked at the PMIs earlier. Equity markets internals broadening. I think we continue to see the dominance of big tech, and for every reason. Like big tech should be dominating. So again, is this time different? Well, things are different. China global trade rebound. I don't think we could look at copper anymore as any type of indication. Obviously, with the volatility we've seen because of the use of tariffs and whatnot. Could we look at China, though, for a signal for a rebound? I guess, but we also have to look at things like Vietnam, Indonesia, Mexico. And as a lot of trade has left China, are those places beginning to grow? India, I think that what has been the China story over the last 20 years is now also changing. Fiscal thrust, persistent deficit spending, fiscal dominance, yes, could stimulate early cycle dynamics even in late macro. This is where I'm at. and this is what I see. And that's a big one over here, by the way. I'm glad you saw that. And is that why the equity markets here are under some pressure today? Or is that because Powell came off a little hawkish? If hawkish is like being, I believe policy should remain as it is because the economy is doing well, I don't perceive that as hawkish, but if you were looking for someone to come out outright dovish, for sure you could. Great session. Smash the like button, everyone. This is, again, we're looking for, are we late cycle? And for sure we have the restrictive monetary policy in place. We do not have earnings growth peaking. We actually have the opposite. It's improving. We do have to watch out for the labor market softening, but that's not happening yet. And we do have the yield control, yield control. We're going to talk about that in 1 second. That was a slip, though. I didn't mean it like that. We still have the inverted yield curve. And so what is normally late cycle indicators, all of a sudden now are seeing a difference. And I'm just pointing out that, hey, listen, it looks like the difference is coming from right here. And it's not without, like, it doesn't mean that it's pulled off and there's a return to growth, but it does look like we are in a late cycle monetary regime with QT running, elevated rates, but fiscal dominance and asset reflation are stimulating an early cycle environment, which is weird because this is the hard part for me. Wait a second. What we're talking about here, and if I'm right, and if what we're seeing is, even though you have these what were late cycle dynamics in play, but a transformation of them because of fiscal dominance, is Bitcoin into early majority phase and the ultimate market opportunity? And is that why the structure is changing? Or is it changing because of this? And I can't answer that. I can't answer that because which is the cause? I don't know. Obviously Bitcoin's not the cause, but I can't answer that one. But they line up together. If that's taking place, then, and we're seeing a return to growth because of these reasons we're discussing, obviously that's going to be shown in the Bitcoin chart as well. The divergence between fundamentals and financial markets is a hallmark of policy-driven markets. It's not traditional, but it's not functional. The key risk: if growth doesn't catch up to price, equities may falter. This is where the tension lies between the Fed chairman and the US president. Because the things that are preventing us from returning to growth, and rightfully so, the chairman could say, I have a dual mandate and I have to worry about price stability. And even though all as I do is cause these sharp cycles of price instability, I pretend that I have to worry about inflation. Whatever. But you can see the tension is that the risk is that we can't engineer this growth. So we haven't made it into the growth phase yet. We have not yet made it into the growth phase. We're currently like in the phase where the tension between the 4-year cycle, between the monetary policy coming to accumulation and what could be a return to growth are taking place. Key tailwind: a soft landing or preemptive easing by the Fed could sustain a mid-cycle extension narrative. And again, there's the tension and why the president is saying you're late, because if you were to ease, lower rates, stop QT, there's a good chance that we're going to be able to go ahead and return to growth. So I could clearly say this: 4-year cycle, if it happens on time, that was lucky. That's how I believe. It looks like there are multiple tensions in play here, and it's too soon to say ultimately which is going to win. I'm betting on the fiscal dominance is actually going to pull it off, but there are risks, and the greatest risk is coming from the Fed and their policy. That does change, supposedly. That's expected to change in 2026 under the new Fed chair. That remains to be seen. So it does look like in 2026, we will also see this one factor that's holding that growth portion back, kind of flipping the other direction. So I guess I wanted to get into the potential of treasury buybacks and including what Besson said about it. But that's a session. That's a wrap. And it was a great session. Great to be here with you all. On your way out, if you were new and just observing, go ahead and subscribe to the channel. We're here every day. Go ahead and hit that bell icon. Replay crew, big shout out. Lots of love, everyone. God bless you. I'll see you all tomorrow for Fun Friday.